Hi, everyone. Thanks for joining. My name is Will Osborne,
I'm Jason Prezant. Nice to meet you.
and today we're talking about multi-family real estate and how you can invest in it through a self-directed IRA and the benefits and all that good stuff. So let's
Cool.
get into it.
So,
All right. Wait, let's scroll down for me. There we go. All right. So we always like to start off by making sure everyone's on the same page. So we'll go over what a self-directed IRA, what it is exactly. So at the end of the day, it's an IRA like you'd find anywhere else. The difference is we can hold alternative assets in our IRA. So it's more of an administrative difference. It's really not a difference in the IRA itself. I mean, it's the
right.
same wherever you go. We just happen to be able to hold different types of investments than most people are used to. So that includes real estate. That's by far the most popular in my experience. But if you wanted to invest in private companies, private placements, promissory notes, aka private loans, et cetera, this is all possible on our platform. And we are a self-directed IRA custodian, and we're regulated as a bank in South Dakota. So we take care of the maintenance of the IRA, make sure we maintain the tax advantage status of the account, depending on what type of account it is, and just manage the account on a day-to-day basis, make sure everything is running smoothly.
Yeah. And I'll say as well, with when it comes to real estate, today is multifamily real estate day, as I'll put it. But yeah, you're not just limited to that. It could be residential, it could be commercial, but we got our focus for today at least.
Exactly. Yeah, we're gonna really dial in on multifamily, but that's true. You can invest in really any type of real estate. So
Mhm.
good point.
All right, so the big question, what is multifamily real estate? So maybe you've driven by a property before and seen two doors there. Maybe you don't know why there's two doors, as a lot of the time it's because there's two different families living in there. And the nice thing with your self-directed IRA is you could actually buy the property itself and instead of just having one tenant, have extra income because now you have two tenants in there. And they could be getting charged the same rate, different rate, depends on the size of the room and who they are. But with this type of account, you could own the property directly, where you're really in charge more as the how do you say it better? Like actually in charge of running the property.
Yeah, you're managing it
But
yourself. You can be a property manager per se if you're the IRA account holder, or you can dive
yeah,
into
perfect.
to the rest of
Property manager.
it.
Blank on that word. But yeah, you can be a property manager, or you could even get into a syndication deal where there might be a sponsor or an actual company in charge that you're more investing into and getting returns where it might involve less work from you.
Yeah, just a number of investors pooling funds, so you don't have to do the brunt work. So yeah, usually there's a sponsor that is taking charge. They're or a general partner, as some may say, or depending on the deal. And the IRA is a limited partner or just a member in the, let's say LLC that's established for the project. So there's many ways of going about it. At the end of the day, direct ownership is possible. Passive investments in multifamily real estate is possible. We can accommodate both. So, and let's, dive into the difference a little bit more. So with direct ownership, the IRA literally buys the property. So it's not going to be the client's name or your name on title. It's going to be your Madison Trust IRA. The titling would be verbatim Madison Trust Company, custodian FBO, so for benefit of, and then your name and your Madison account number. It's a little bit different if you have a checkbook IRA. I know some of you are probably familiar with that concept, and we do have several webinars on that. We can dive into that a little bit more later
Yeah,
on. I think
totally.
that's a great idea because this is really, that's pertinent. But so at the end of the day, yeah, the IRA literally owns the property, does require some more sort of oversight from the client unless you hire a property manager. That's or a property management company. It's definitely possible for the IRA. And you need to make sure all income that's generated goes back to the IRA and any expenses associated with the property are paid out of the IRA. So it's very important that you're not commingling personal and IRA cash. And we'll, dive into prohibited transactions later on.
Yeah, totally. And when it comes to syndication deals, often Madison Trust Company will be in touch with the sponsor. That might be a big development company where we're helping streamline the process for a bunch of investors. Sometimes it's a smaller private deal just involving you. Either which way, we'll have you covered. We'll review all the documentation that comes along, and we'll help you get streamlined into that deal, of course.
Yeah, exactly. And funny enough, our last webinar about a month ago
Yep.
from today was on syndication. So you can always go on our website or YouTube, check that out if you are more interested in that sort of topic. Yeah,
All
and
right.
when it comes to the advantages, so you can see them clear as day right there. But I think that the most important sort of aspect of a self-directed IRA is the diversification it offers. And most people, as I mentioned in the beginning, they're not stuck necessarily with stock bonds and mutual funds. They just don't know that they have the option to branch out into alternative assets. So that's really where the self-directed IRA is a real benefit to most individuals. The tax advantages are still there. So you're still either going to benefit from tax deferred growth in a traditional self-directed IRA or tax-free growth in a Roth IRA, assuming you're following the Roth IRA rules. Um, and yeah, you have access to private offerings with large brokerage firms. Name any big brokerage firm that offers IRAs. You're not going to be able to get into these syndication deals that we've been talking about. It's just not their wheelhouse. So that's where a company like Madison Trust, this is our bread and butter, these type of investments. Yeah, go ahead, sorry.
And really, when it comes to how much money to move over and how much you want to diversify, that's truly up to you. Some people are just moving part to get into a small deal. Sometimes you have a ton of money sitting in an IRA or previous employer 401k that's very easy to move over, and we can help you move more of your money into it. It's really up to you how much and how many different deals, but overall, we have you covered.
Yeah, exactly.
Okay.
And yeah, of course. So when it comes to compliance, it's very important when it comes to IRAs, given all the rules and restrictions that clients and the custodian need to keep in mind. So if you're buying a property directly through the IRA, we do need to review the documents associated with the purchase. So purchase contract, settlement statement, draft of the deed, these are some documents that come to mind. So anything associated with that investment, send it to us for a quick review. Usually it doesn't take more than about 4 business days for the review. UBIT, or unrelated business income tax, can certainly apply here. You know, multifamily is going to be more expensive than normal sort of residential single family homes or properties. So financing, it may be the only way it's possible for some individuals. Can't speak for everybody. If you do need financing, first of all, it's going to be a non-recourse loan. And again, I just want to make it very clear, we do have a lot of webinars that go more in detail on these topics, but very generally, that means that in the event of default, the bank or the lender can't go after the IRA account holder directly. They can only take back the property. That's it in terms of collateral. They can't try to satisfy any outstanding debt by going after the rest of the IRA. If you have a checkbook IRA, they can't go after the LLC and its assets. And again, they can't go after the account holder. But at the same time, any profits that are generated from or that are attributable, let's put it that way, to the debt financing, it's going to be subject to this UBIT tax. So the profits attributable to the debt financing is called the UDFI, unrelated debt financed income. So it's going to just depend on the leverage ratio, really. And yeah, this is a tax that the IRA pays. And the form you'd fill out is Form 990T. You'd work with a CPA to have that filed. Madison Trust would just countersign it. And yeah, and then it would be filed from there. So again, I'm really being very general. It's a better conversation to have with CPA, I'd say, just because we're a passive custodian. So keep that in mind, but definitely worth bringing up, especially in this context. And because we are passive, you're going to be doing most of the due diligence. If an investment is being brought to us for review, we're just making sure there's no prohibited transaction, really, and just making sure we can hold it. But it's not our role to say, an investment is good or bad per se. So keep that in mind. But if we see a prohibited transaction, we're gonna, red flags will be raised, and we'll take care of that from there. And yeah, that brings us to the last, prohibited transactions. Don't Well, let me just put it this way. There's disqualified individuals to the IRA, and these individuals can't transact with the IRA or benefit from the IRA or vice versa. So disqualified individuals would be the IRA account holder themselves, their spouse, parents and grandparents, so lineal ascendants, and children and grandchildren, so lineal descendants and their, children-in-law.
Mhm.
So the IRA, you can't live in the property owned by the IRA. Same with those individuals. These individuals can't put sweat equity into the property. That's a weird one, but just keep that in mind. Anything administrative is okay for these individuals to take care of, but if you're breaking a sweat or any physical labor is involved, just don't do it. Hire a contractor, plumber, whatever you need to do, that they can be hired and paid from the IRA. And yeah, just don't transact with the IRA either. If you own a multifamily, property, you can't sell it to your IRA or transfer ownership. That would also be prohibited.
Mhm. We covered a lot there. That's awesome.
Yeah, that is a lot
But
of fun.
really, when it comes to those prohibited transactions, that is a super key part. If you ever have a question, don't just take a guess and all of a sudden send it out and rent it out to your close family member. You can call us, ask us, or if it's really not black and white, we're not clear on it, we'll tell you, speak to an attorney. They're happy to, try to find a connection for you and go from there.
Yeah, exactly. The black
Um,
and white we can do, but we don't want to cross the line of giving advice. So that's a very important point.
Yeah.
And I'm sorry if I cut you off.
Oh, you're good. You're good. All right, so this is the fun part, how to really get started. What really does that look like? So first off, you'd probably be talking to Will, myself, or somebody on our team just so we get a better idea of what your goal is, whether it's a syndication deal, whether it is actually buying the property itself. We'll help you opening the account. There's a couple different account types. We'll cover that at some point because there's custodial accounts, then there's checkbook control. One or the other might benefit you in different ways. But either which way, we'll send you the application. We'll have you go right through it. Funding it is really the next step. So if it is during an investment documentation approval, don't think that you have to fund the account and then get it approved. We can work on everything at the same time to help streamline. So we'll review everything, whether your money's coming from an IRA or 401k or elsewhere, we'll help move the money through. And then last but not least, we'll help you with the actual investment. You'll likely fill out a transfer authorization form. You'll see that in your client portal with us, which is very easy to navigate through. We'll give you a lesson on it if you need it. And really, you'll be able to fill out that form. We'll help push the money through at the end of the day.
Exactly. Yeah. So again, I mentioned this earlier, but investment documents for the real estate or investment documents for your syndication deal, they come to us for a syndication deal just because I didn't touch on that in detail. Really, normally there's a private placement memorandum that we'd be reviewing and or an operating agreement or maybe even an LP agreement, as well as subscription documents. And on those subscription documents, as part of the investment process, we're helping you list your IRA as the investor. So keep that in mind, just need to make sure everything is kosher on our end before the funds are released where you tell us.
Of course. And I'll just cover it really quick. Checkbook control, if you are looking to do an IRA LLC or IRA trust, that is that unique structure where you would actually have a checkbook in hand. You wouldn't have to place a trade order with us. That does come pretty often for things like real estate. So we'll discuss that if you ever want to. But really, we wouldn't need to go through that investment documentation phase. We just move the money to a bank account, especially set up, and then you'd be able to make your investments happen, be more control from there.
Yeah,
So,
exactly. Normally you'd have an LLC held by the IRA, and instead of having Madison place the investment, you're doing it at the LLC level. So you set up a checking account for the LLC. We move your IRA funds from the Madison account to the LLC checking account, and it's just a matter of taking care of the wire or check that's needed to purchase the property. Everything's done in the name of the LLC rather than in the name of the IRA. But the reason why you would set up this structure is for the real-time access to the retirement funds. So you don't need to make the investment through us. You don't need to have us process expenses as they come up, and any income that's generated goes back to the LLC rather than the IRA. So you're cutting out Madison's involvement when it comes to maintaining an investment. We're still involved for everything else. Anything reportable or taxable, that's where we come in. Anything related to the investment, if you go the checkbook route with the LLC especially, do it on your own. You're the manager of the LLC. You can take care of it.
all right. So really, how do we support you? And then first off, especially for things like real estate, I know a lot of real estate deals involve a pretty significant amount of money to bring over. So our fee structure here is flat rated. So that means no matter how much money you're bringing over, we're not going to charge you more because your portfolio is doing well. It's just really based on the number of assets you have in a custodial account. Just to quickly touch on the checkbook control, you can hold multiple assets in there. That LLC or trust would sit as one asset to keep your fees even better flat rated, if you want to call it that way. You have a dedicated team here. So not just on the starting point with us helping you get started, you'll unlock access to our whole client support team. There's a lot of people over there. They all are very well versed with how real estate works, especially in an IRA. So we can definitely help out. They streamline the whole process for you getting started. We'll help there as well. So the funding, investing, getting started. And we have tons of resources. So if you go on our site, not just the webinars here, there is so many different blog posts. covering, you can just type in real estate, type in non-recourse, type in multifamily, probably there's something else. We have a ton of different posts, and that's what we're here for. While you get started, read something, watch a video, we'll answer those questions, whatever you have.
Yeah, flow charts too. I love the flow charts.
Yes,
I even
flow
look
charts
at
are
those
great.
myself just to make sure I, I'm sharp on the process. But yeah, it's tons of helpful material on the website.
And actually, those flow charts, the key part with them is they show all the investment documentation that you would likely
That's
need for
right.
your situation.
That's
So,
right. That's correct.
cool.
Yeah, so we're at the end, but just to recap, multifamily, it's possible in a real estate IRA, whether it's a mixed use building, which we go in a little bit of commercial real estate, condo complexes, owning a few units there, apartment buildings, duplexes, triplexes, etc. Student housing. I've seen
Yes.
student housing more recently. That's gaining some traction. Townhomes, I can go on and on, but just want to put some ideas out there. And yeah, the potential for income generation is there because you're multiple units generating income. More stability because if you have a vacancy, you have another unit that's generating income. So just a lot of real benefits of owning multifamily real estate in the IRA. So if you have the funds available or are intending on securing a non-recourse loan, give Jason or I a call. We're happy to help out. You can either schedule a call there. You see these QR codes, of course. And you can either get me or someone else on the team as well as Jason, or if you want to reach out to us directly, assuming you're not a client yet, you have our information there. And if you are a client, you can always reach our support teams, and refer friends too and get those referral bonuses. So in terms of before the questions, that's really all from me.
Yeah. And I'll say one more thing as well with real estate. It doesn't need to be a real estate property or a real estate deal that is miles and miles away that you don't really know who they are, kind of like a stock where you're just more seeing the number go up and down. You might have a house down the street or in your town that is like, wow, that actually might be useful for my self-directed IRA, assuming that you're avoiding any personal close family relations to it. You might be able to get a local deal done. So definitely leaves it open in this type of account.
Yeah, certainly. Good point.